Hey, Southwestern Ontario.
Hello, everybody. We are welcoming you to our very first episode for Selling Lifestyles in Southwestern Ontario. We are so excited to have you here.
Today we'll be joined by my preferred mortgage broker, Troy Kirkwood, and his colleague, Spencer Joyce. Okay, welcome everybody to our very first podcast episode. No, podcast, YouTube, everything together, right, Amanda?
It is. It's everything.
There you have it. Just breaking the news over here to Troy and Spencer too. So we're super excited today. Amanda and I are diving in with these gentlemen in front of us into the home financing world and really focusing on what happened yesterday with the Bank of Canada's announcement. So today I am very honored to have Troy Kirkwood and Spencer Joyce with us. They are my preferred mortgage specialists who really care for your needs.
Yes, thank you guys so much for being here. We are just going to start off the conversation, if you don't mind, just sharing with us who you are, what is farm lending, and just a little bit about yourselves and what you do.
Appreciate it. And first off, thank you for having us. We're absolutely excited to be a part of this, we look forward to working with you guys. And Jill, well, you know how I feel about you, so we'll just leave it at that. My name is Troy Kirkwood. I'm a mortgage broker here at Farm Lending Canada. Farm Lending Canada is essentially a lender with a brokerage inside of it, which is family lending, which is where I got started. I've been 8 years now in this business and have seen the ups and downs of what we call this mortgage world, mortgage ride that we're in today. And am really excited about talking about the announcement, the favorable announcement that everybody's been waiting for yesterday. So with that, I'll just leave it with Spencer.
Hey everyone, thanks for having me as well. I appreciate it. I'm Spencer Joyce, and I'm fairly new to the mortgage game. I started last fall, so fresh face, fresh mind, fresh ideas, and I'm extremely glad to be working with Troy. He's been a great mentor. I've got a busy plate, which a lot of people starting off in this industry don't necessarily have. They have to go and fight for those referrals. And so I've been extremely grateful, and I'm looking forward to what the future has in store with Farm Lending Canada.
Oh, that's awesome, Spencer. And you're right. You have a wonderful mentor in front of you there.
I certainly do.
That's great. So, guys, can we just go right to the breaking news of our interest decrease yesterday? What's it like in your world right now?
Let's just say the phone's been ringing and our emails have been lighting up. But yesterday, it took about all of 2 minutes. And as soon as that rate cut was announced, the phone was ringing and the emails were coming in. What's next? How does this affect me? So, there's a bit of a misunderstanding out there in the fact that a lot of our borrowers just thought it affected their rates in general, meaning fixed and variable. When the truth is that rate announcement yesterday affects the Bank of Canada Prime, which affects variable rate mortgages. So all mortgage holders that have variable rates, that was very welcome. It's a quarter of a point, 25 basis points. It doesn't sound like a lot, but you know what? For a lot of borrowers, it's anywhere. It could be $80 a month, it could be $100 a month, it could be $120 a month. But the fact is that it was a decrease. And for all those variable rate mortgage holders, lines of credit, home equity lines of credit, they all got affected yesterday to the good, meaning that that monthly payment will now go down as of, I would have to think, likely August would be the first time they would see it.
So can I ask to clarify, does that mean personal lines of credit
Yes, it
as
will.
Well? Okay, how about car
that?
loans?
Not necessarily, no.
Okay, all right, good,
Yeah.
Good to know that.
Yeah.
So a quarter of a point came down yesterday and your phones and emails started to get bombarded. But that's great because I know you provided your clients with all of the great knowledge that they needed to fully understand it, because it can be complicated.
Yeah, and again, it's that misunderstanding again, where a lot of people just thought, it was just the rates in general. Now, not getting too off topic, but the fixed rates, they do pay attention to what happens there. But from what I understand and from what I'm reading, with the bond market the way it is, and investors in the bond market just kind of watching and seeing what's going on here and on the other side of the border, fixed rates are going to kind of maintain, as I hear it right now, with the potential to kind of have a trickle effect down in the very near future.
Okay, so the next decision date is July 24th. And so what's your thoughts around that? Is that when you think we'll see that
I
come
honestly
down?
think, and again, this is purely speculative, but based on what I've been reading, another rate cut is very likely, of another 25 basis points, with a pause after that to kind of see how everything shakes out, see how inflation reacts, and then likely maybe another one after the September announcement.
Okay. Okay. Yeah, good to
So
know.
when you're talking about just helping, especially first time buyers, understand what the announcement that was made yesterday, when you're talking about the overnight rate and not affecting fixed mortgages, does that mean that to see the effects of it, you need to sign up for a variable mortgage?
Yes. Yeah, you need to either sign up for one or be in one. And it's funny. That's a good point, because it really comes down to the cost of borrowing, and looking into the future. And it's a crystal ball that nobody really has, but
Yes.
everything points to that rates will go down, and just how much, it's hard to say. And when I say rates, I'm talking rates in general, meaning that the fixed rates are very likely to go down a little bit in the coming months, coming years. So, getting into a variable rate right now is really not a bad thing, because it does give you that option in 2 years' time, if rates go down a full point, or half a point on the fixed side, that you could transfer over. Or the other option is, right now a lot of people are looking at shorter terms, 3-year fixed rates, to kind of try and guess the timing as to when those rates might bottom out.
Yeah, and just to add to that, for first-time home buyers, sometimes they're looking to maximize their purchasing power. So the lowest interest rate you can get tends to be that 5-year fixed rate. So it kind of puts you out of those preferred products right now for those first-time home buyers. But it's still great for anyone to get into the market and to have that ability to start that home ownership. And I'm sure you guys have those conversations with your clients every day as well.
The
Absolutely.
one thing, sorry, Joe, if I could just kind of piggyback off that, the one thing I would suggest and throw out there for people to look at, and I was reading an article just the other day on this, and it makes total sense, is you can look at a 5-year rate right now, and you can look at a 3-year. The 5-year is obviously going to be the better of the rates, but that doesn't necessarily mean that it's going to be cheaper over the term. So the cost of borrowing on a 5-year versus the cost of borrowing on a 3-year might actually be more than taking that 3-year and trying to get in at that lower rate. So I would strongly suggest for people, if especially first-time home buyers, when they are looking and trying to source a mortgage, that they do go over that with their broker that they're working with, or whoever it is that they're working with, and just get an understanding of what it actually is going to cost them to take on that mortgage or that rate for that term, and compare apples to apples. Because a lot of people just look at that rate and go, okay, I'm going to take that, not taking into consideration the cost to actually get that mortgage done. So that is the one thing that I would strongly suggest, is just look at the overall cost to do that mortgage based on that rate for that term, and
Long-term goals,
just
yeah.
yep.
You know what? that is such an important thing with this. And Amanda, how many times have you heard clients say they don't even know what they're in, what they're locked into? They have no idea. And that is what I have to say. It's so important to get hooked up with a wonderful, experienced, caring mortgage specialist that's really going to sit with you and go through, and so that you truly absolutely know what you're signing up to.
It is the one thing that is really stressed on these days is suitability, and it needs to make sense. It needs to be shown that it makes sense. It needs to be acknowledged that it makes sense and that it fits the needs and the cost of the borrower. I can't stress that enough. That when a client walks away from a mortgage application or a mortgage like a purchase, they need to know and feel absolutely comfortable that it is suitable. The product is suitable for their needs. That is so important these days.
Pre-planning, have a budget, and stick within it.
So how do you take a client and get them to the finish line? Like, there's so many different dynamics that are brought into every case, and so many different lenders, so many different options. Like, how do you even start that process with people?
It's for us, and I would assume for a lot of other brokers and agents out there. It all starts with it's what we call a know your client. And that is a lot of times when clients see this form, their first reaction is, do I really need to fill all this out? Because it does seem like a lot. But once we sit down and explain to them why we want them to fill this out, then they have a good understanding, because then it gives us a good understanding of what is going to work for them and what they're looking for. And then once that is done and we actually go through the application with the client, then it's a matter of us knowing our products once we know our client, and then marrying the two together. And it's all about options at that point and what's going to work best for what the client's needs, and being able to check all the boxes on that know your client, with us knowing our borrower. So it's a process. Each case is a case by case basis, but in general, the process is still the same for every client.
And that, in my opinion, is what makes you a true professional at what you do.
Thank you.
So, yeah, absolutely.
Yeah, knowing all the products and stuff. So can you talk a little bit about that? I think especially for first-time buyers, but even people that have mortgages, they have them with the A lenders, the major banks. They don't understand what a mortgage broker does. Can you explain who you work for, kind of how you get paid? Do you charge clients for setting them up with mortgages? How does it all work?
So we work for the client. We work for the borrower. And it's, again, it comes down to that client's needs and what differentiates us from the bank, or I'm not one to talk negative about anything else. I'll just say what we do and what we do well is communicate. And that is everything. And these days, if there's one thing that I hear that's more common than not, is communication and the lack thereof. Customer service is extremely important. And that's why I know, working with Jill, and I know, Amanda, if you're anything like Jill, that customer service is going to be top notch. But it's something that seems so simple that, again, it seems like it is lacking in some areas. But that's what we pride ourselves on, is that customer service from beginning to end, and after the fact.
Yeah. And that is 100% true. Everybody watching this man goes above and beyond. I could tell you stories, but we'd be here a long time. So,
and she probably cry.
Yeah, it's actually incredible the level of service that Troy provides. And Spencer, you are mentoring under him, so I am
It's
sure
there.
you are learning
It's
all.
there.
You're
Get a
learning
swift
all
kick
the
in the butt back on track.
perfect.
Well,
I'll give you one too, so you know.
if it wasn't, that's for sure right now. I always like to describe it to my clients as think about it as shopping for shoes. If you go to Nike, you can only get Nike shoes. If you go to Sport Check, you can have all the different brands of shoes, and it's kind of like that. You guys have access to so many different lenders, so many creative solutions. And so when I'm explaining it to my clients, that's a way that I like to try to help them understand what it is that you guys do.
I always
You know,
refer to
plus,
it, and I'm glad you said that, Amanda, because I always refer to it like Trivago, right? It's like you give us the information, we offer you the choices, and it's not just in a box. Like it's a box with stretchy sides. We can, based on the needs, and we've got opportunities and choices are good these days.
I love that. And I'm going to share because you guys shared what your analogy is. I use a rainbow. I put all the banks, RBC, BMO, Scotia, whatever, they pull from here, 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 here. But Troy can pull from all of
Yeah.
these. So,
that's
so
cute.
yes, that's how yeah.
Rainbow, I get that's awesome. I love it. So when clients come to you, do you get like do they ever have to pay a fee to have their mortgages set up, or are the banks covering those fees? What's it like for them that way?
It all depends on the type of deal. So, if it really is client by client, and it depends on the situation, and it depends on the type of deal. So, for example, like AAA borrowers, that are prime borrowers, the lender pays us. So there's no cost for our services in that regard. There are cases where, if we start getting into alternative financing or private financing, where there may be a fee charged because the lender isn't paying us.
Okay.
But so it's to answer that, accurately and say yes or no definitively. We really can't say that because it really depends on, I don't want to say the level of service, but the type of deal. It is specific. More often than not, the lender is paying us. But in the case of where it's a deal where the lender isn't paying us, then yes, we do have to charge a fee. But normally in those cases, it's a little more risk based, and it's a case where they don't fit in a box, and we have to find that box to fit them in. And the opportunity is likely there, but it will come with a fee.
Okay.
Yeah, no, that makes sense. And behind the scenes to do that, Troy is working
Yeah,
so hard
it's a
to figure
different
that out.
level of service for sure. Yeah.
Yeah.
Absolutely. Absolutely. In that.
Together.
So I have a question. How does everybody on this little fun little panel we got going on today, how does everybody feel yesterday's drop, target rate drop? How do you feel what's going to
I
happen?
honestly, and I know, Jill, you and I have talked about this, but in all honesty, I think the bubble was ready to go. And I think everybody was lit. I think there's a lot of buyers out there that are just waiting for that first hint or glimpse of, okay, the market's coming back. So I would be shocked if we don't see a small surge in purchases. Because
Yeah,
I
honestly, just
do
like
think there was people waiting in the wings.
yep, just a little light
Yep.
at the end of the tunnel is what yesterday
Yep.
was.
Yep.
I know it wasn't, everybody would have loved if they would have done, a drop in the fixed rates, but it was just a little precursor to kind of tell people it's coming, guys.
Yeah,
It's
and
coming.
you know what? In all honesty, I think everybody, for the most part, is now out of the COVID hangover, and realizing that where we were and what we were into is not the best for our economy in general. So we're not going back to that so that we don't end up where we just came from. So when you look at that and you look at where the fixed rates are today, they're really not that bad. Like they're good, you know.
What do you, Troy, are you able to share? What are you seeing
So right
today? What's a
now
good
on the insured side, so if it's CMHC insured, 4.89 and likely a little better, but I know we can get 4.89. And then, you know, in the conventional or insurable market, you know, you're in the low fives. And then for refis, you know, you're in the mid fives right now. So it's really not that bad, you know. It's you know
historic?
some people on their renewals, you know, that's still the heavy topic of the day, you know, is what renewals are going to look like for people. They are going to see some, you know, significant increases in their payments, but you also got to look at a lot of that was factored in, you know, based on where we were qualifying people, you know. So when we were in the COVID crazy, you know, high ones for fixed rates, we were still qualifying at 5.25. You know, so it's still doable, but they will feel the pinch, you know. But it won't be that bad.
Yeah.
But
You know what? That is such a key piece of information that I don't think that enough people know about too, is that you are actually qualifying them at a much higher rate. And obviously, people's lifestyles kind of, dictate that as well.
Like
But
just after buying their home.
right, go ahead, Amanda.
No, I was just going to say, explain to us a little bit more of what you mean by that, Troy. So I'm taking it as that people should be able to afford the increase that they're going to have in their mortgages unless they
yeah,
financed a lot of
yeah,
other things after getting
that's the caveat right there is, and that's always been the concern, right? Is extra spending that was going on based on the fact that rates were so low, you know, a little cheaper money to get borrowing wise. So that being said, you know, that's where, you know, when people are renewing from, say, high ones, low twos into now, you know, mid fives, you know, they're going to feel that pinch. But we did qualify them at 5.25. So everything stays the same. It really wouldn't be that bad. But it's anything that happened between then and now, you know, that could, you know, affect the overall picture as far as what the actual costs are for the client. But
Liabilities and other
yeah,
debt that was accumulated.
yeah, and you know,
That's
the opportunity for some will be there to, you know, at renewal roll everything in, you know, and then take it all down to one payment, and then that cost of borrowing isn't so bad at that point.
Oh, Troy. So that's another golden nugget right there, as far as I'm concerned, is to let people know there are ways that you can
100%.
help them. That
100%.
it, it's such a doom and gloom that you hear day to day on the news about this, and the reality is, it just really isn't as bad as I think our news is making it out to be.
It's not. For some people, it more than likely will be, just based on any extra spending that took place in that time frame. But in general, it shouldn't be. But you know, it's for some people, they are going to be affected.
And I think Troy made a good point. It's about adjusting to the new normal. We're not returning to the ones and twos. It's going to be the 2-3 normal range that everybody needs to kind of focus on. That's where we're getting back to.
Yeah.
So going into that, no one having a crystal ball. Where do you guys think that it will land? Where do you think is going to be our new comfortable
Well,
rate?
it's. I was just reading a thing from TD that they're talking potentially, you know, a couple more rate drops on prime this year, potentially another 4 in 2025. which I have to believe, again, no crystal ball, all speculative. I would say that, the fixed, the fixed could get down into the low fours potentially, come next year, the end of next year. Hard to say. But again, I just want to reiterate that where we are today, if everything stayed the same, it's really not that bad.
Not
No,
historically.
exactly,
It really
Jill.
is.
Exactly.
Yeah, I was going
So,
to ask, like, we are pretty, like, if you look at historically where interest rates have fluctuated to, we are pretty in line, aren't we, with
Yeah.
what history has
Yep.
seen?
Yep.
Yeah, you know.
Yeah.
I think for, like, if I think about the time that I've owned properties and have had mortgages, we've been in the market for about 13 years, and for the majority of our time, we've had the 2% interest rates. Like, we haven't known anything in the fours, and I think a lot of my generation would be the same, so that's why it feels so shocking to everybody. But I get the stories from my parents all the time about the high interest rates that they've had to pay. And
yeah, credit card interest rates on mortgages.
yeah,
but they did it. That's the remarkable thing, is that they
Yeah.
did it.
yeah, they did. Yeah, their mortgages weren't quite what ours are either,
No,
but I remind them of that
it's
all
all
the time.
relative, right? It's for sure.
Yeah.
No, really, really, no, really, really great. Well, this was so informative. This was so great,
Yep.
guys.
Yeah.
Amanda, can you think of anything else you want to ask these amazing gentlemen before we let them get on to their busy day? Which, guys, we appreciate your time so very much.
Thank you.
Yeah, no, I think that was pretty much it for me. Thank you for bringing a lot of hope to people, because I think people need to be reminded that we're in a good spot here. We're not in a bad spot.
And I
So
have
thank
to
you for
believe
that.
we semi turned a corner yesterday. It's just it's just nice that it's to see that first one finally. Now we just hope inflation does what it's supposed to do, and we can do that slow trickle on the downward curve.
Yeah.
I think it just brings a little bit of confidence
Yeah.
back into the market too. Right? Things are trending towards, a better way. So yeah, I do. I'm happy they made that decision yesterday and did what they did. And I'm also really happy, which you noted on Troy too, is that they're being very cautious
Yes.
with these moves, right? They need to be, because we don't want to end up back where we were before, because that was crazy is the only word I can really use for that.
What appeared good wasn't
sustainable.
great.
No, not at all. So no, that's awesome. Okay, so I just have one last question, and then we'll sign off. We'll let you guys go. So people out there about needing the need for refinancing, what would be your suggestion at this moment today, if they are right now in a fix, they're about to come up on their term, and would you suggest a variable, or would you suggest maybe back the fix? Like,
It really comes down
thoughts?
to, and Spencer mentioned it. It comes down to product suitability, goals, long-term goals, and affordability. Look at your overall picture, and if wrapping all your consumer debt into one, get it down to one payment. You'd be surprised at the savings that gets you. I would just, to say fixed or variable, it really comes down to personal goals, and what your long-term plans are. There's so many different variables that can change which way you go. I would just say have a good, honest, open discussion with your broker. Ask a lot of questions. Make sure they ask a lot of questions, and that way you can match your long-term goals, short-term goals, just goals in general with a product.
What a perfect answer. Anything else, Amanda?
Yeah, I lied. I have one last question. Do you service just Chatham-Kent, or are you able to help people within Ontario?
All of Ontario. We're licensed everywhere but Quebec.
Okay, and how can people reach out to
They
you?
can get us either on our website, or they can call us at 519-351-7283.
Okay, perfect.
Amazing. That's amazing. So everybody out there, whether you're a first-time home buyer looking to refinance and exploring investment opportunities, farmland, these guys sitting right here, these dedicated professionals, will provide you with personalized service and expert guidance every step of the way. I promise you that.
And I will just piggyback off that, Jill. If there's anybody out there looking for a realtor, look no further. You got two fine ladies right here that are as professional and ethical as they come.
Oh, Troy, thank you.
Thank you so much. Well, guys, have a great day. Thank you so much for taking the time to meet with us today. We really appreciate it.
We truly appreciate it. We're grateful for the opportunity. Thank you both.
Thank you.
Have you guys ever been on
No,
YouTube
this is the
before?
first.
Amazing. Amazing. We'll make sure you get it. We'll get it over to you so you guys can have
Appreciate
a
it.
too.
Yeah.
Thank you so much, ladies.
Okay.